The Aussie dollar fell through 75 cents this week as some key domestic data disappointed. That said, all commodity currencies were weak. The Australian dollar and the Kiwi dollar were the weakest G10 currencies, as well as the Canadian dollar and the Norwegian krone. We saw 4 significant pieces of data this week regarding confidence as well as the labour market. Firstly, regarding confidence, we received updates on business and consumer confidence, where the divide continues. Business confidence was the strongest it's ever been. However, there was a lot of strength in manufacturing and New South Wales, so we think there's some noise in the data and perhaps overstating the true economic conditions. So the consumer confidence was weaker for the month of November, and we saw it slip under the 100 line, where pessimists outweigh optimists. October had shown a glimmer of hope there, where consumers felt a little bit confidence, but that slipped back in November. In fact, October has been the only month where consumer confidence was above 100 in the last 12 months. The Aussie dollar had the biggest fall this week, was actually on the release of the wages data, which really disappointed the market. The market had been expecting a gain of 0.7%, due to some technicalities with the minimum wage decision, which took effect in July, coming into the data. In the event, it only printed at 0.5%, or 2% for the year, which showed that there really is this weak underlying wages story and a real lack of wage pressure in the Australian economy. So we saw a bit of a contrast then to the jobs data that came on Thursday. We saw a net gain of 3,000 jobs, but the mix was very positive, with a lot of full-time job creation. The unemployment rate fell to 5.4%. But what we're seeing here is that this strong jobs growth has been in areas that have lower wages or lower paid workers, and as well the underemployment rate remains quite high, so we've still seen quite a lot of slack in the labour force. On the global front, probably the biggest news this week has been the ongoing negotiations and indeed the passage of the US tax reform bill through the House. Now, this has given equity markets some renewed optimism, and indeed we've seen that the Fed hike in December remains virtually 100% priced by the markets. Next week, we don't have any top tier data domestically, so we will be looking offshore for direction. However, with the RBA less than 50% priced of a hike by August next year, and the Aussie dollar breaking through 76 cents this week, we'll probably trade between a 75 and 76.50 range.